How difficult is it to take these issues, put them together and have any kind of clarity on the direction of policy and then apply that to markets and take a view on a space like, say, emerging markets?
So if you're trading emerging markets, I don't think China-US trade negotiations should be your number one issue. I think I agree with Jamie Dimon that you can sit down. There are genuine issues, particularly with IP, that require discussions and negotiations, and you can get to a better place of fairer and still free trade through negotiations. When you look at EM, and I think the tweet you put out today showing what has happened to currencies in EM space gives you some indication as to what you should look at. The big question in EM right now is how do they navigate the stronger dollar, which I suspect will continue, and that's particularly important for the more vulnerable economies, Turkey being the chief example of that. And that's a key issue for the asset class that has attracted a lot of tourist dollars. So don't underestimate how weak technically this asset class is right now and how in the past it has found it difficult to negotiate major dollar appreciation periods.
Mohamed, just looking at the pain in FX, and you referenced that chart I put out on Twitter. I'm going to bring it to our viewers as well right now on WCRS on the Bloomberg terminal. The weakness, the brutal weakness that has come through to EMFX over the last month is quite phenomenal. You see the moves at the bottom of the screen here with the Turkish lira down by almost 6% just over a single month. Mohamed, it was really interesting to me that Fed Chairman Jerome Powell was speaking in Zurich this morning, and he was talking about not overstating the Fed's role in global financial conditions. Do you think we are overstating the Fed's role, or is a lot of this off the back of higher short-term rates here in the United States and a stronger dollar that's coming through?
This is on the back of what was an exceptional 2017, Jonathan. You know, investors had it all in 2017. High returns virtually on every asset class, so correlations broke down, but broke down in your favor, and virtually no volatility whatsoever. So we're coming from a period of exceptionally good conditions for investors, and we are returning to a more normal period. In this more normal period, some of the carry trades that are based on assumptions of very low volatility will get hit, and they have gotten hit. So I keep on telling people, remember your initial conditions. Your initial conditions were incredibly distorted, and we're returning to more normal market conditions.